Global energy markets are experiencing a sudden wave of volatility. Oil prices have recently surged above $110 per barrel, sending ripples across financial markets and raising new questions about the stability of global energy supply. Investors, governments, and energy companies around the world are closely monitoring the situation as several developments across the Middle East begin to influence the global economy. One of the most noticeable reactions came from energy markets. Within hours, crude oil prices climbed sharply, marking one of the fastest increases seen in recent months. When oil prices move this quickly, the effects can spread far beyond the energy sector. Transportation costs, manufacturing expenses, and consumer prices are all linked to the price of energy. This means a sudden spike in oil prices can eventually impact businesses and households across the world. As the situation developed, the United States government issued a precautionary advisory asking non-essential government personnel to temporarily leave Saudi Arabia. Officials said the move was made due to rising regional security risks and the possibility of missile or drone activity in nearby areas. Embassies around the world sometimes take these steps when the security environment becomes uncertain. These precautionary decisions are designed to protect personnel while governments continue evaluating the evolving situation. At the same time, energy markets reacted strongly to reports of disruptions affecting oil infrastructure in the region. When infrastructure linked to oil production or transportation faces uncertainty, traders often respond immediately. Markets work on expectations. Even the possibility of supply disruption can push prices higher because buyers and investors try to secure resources before shortages occur. Another factor contributing to market concerns is the Strait of Hormuz. This narrow shipping route is one of the most important oil transit points on the planet. Every day, a significant portion of the world's oil supply travels through this corridor, connecting the Persian Gulf to international markets. Recently, some shipping companies began exercising caution while navigating this route. Any disruption in tanker movement can affect the steady flow of oil that global economies depend on. Because of this, energy analysts say markets reacted quickly to protect against the risk of tighter supply. Several regional energy producers also signaled that they may adjust production levels temporarily while the situation develops. Production adjustments are sometimes used to manage stability in energy markets during uncertain periods. These developments pushed oil prices higher during early trading hours, with international crude benchmarks moving above $110 per barrel. Financial markets across Asia reacted almost immediately. Major stock indexes declined as investors began shifting towards safer assets. When energy prices rise quickly, investors often worry about inflation. Higher fuel costs can increase expenses across many industries, from airlines and shipping companies to manufacturing and agriculture. For example, airlines rely heavily on jet fuel, which is closely tied to crude oil prices. If fuel becomes more expensive, operating costs rise, and companies may eventually pass those costs on to consumers. Economists say that energy shocks have historically played a major role in shaping global economic trends. Because of these risks, several governments are already discussing possible responses if energy prices remain elevated. One option often considered during energy disruptions is releasing oil from strategic reserves. Countries such as the United States maintain emergency oil reserves specifically for moments when supply instability threatens markets. Releasing oil from these reserves can temporarily increase supply and help stabilize prices. However, experts note that such measures are typically short-term solutions rather than permanent fixes. Long-term stability depends on the reliability of global supply chains and the continued flow of oil through major shipping routes. Diplomatic engagement is also increasing as governments seek ways to reduce tensions and maintain stability in global trade. Major economies are encouraging dialogue and cooperation to ensure that energy markets remain stable and that supply routes continue operating safely. International energy markets are highly interconnected. Events in one region can quickly influence prices, financial markets, and economic expectations across the world. For now, analysts say the situation remains fluid. Markets are adjusting quickly as new information emerges, and governments are watching closely to determine whether further action may be needed. If energy supplies remain stable and shipping routes continue operating normally, oil prices could gradually settle down. However, if uncertainty continues, markets may remain volatile in the weeks ahead. What is clear is that energy remains one of the most powerful forces shaping the global economy. From financial markets to everyday consumer costs, changes in oil prices can affect people and businesses almost everywhere. For now, investors, governments, and industries around the world are paying close attention to how the situation develops. As more updates emerge, the global energy market will continue reacting in real time, showing just how interconnected today's world economy has become.